So now we're going to go into talking a little bit more about our guest, which I'm very excited to talk to. Indeed, KitKat is a great trader, so I'm very interested to talk to him and see exactly how he's become so good of a trader. So I kindly ask you, KitKat, can you please introduce yourself, a little bit about what you focus on and what makes you such an exceptional trader?
Thank you, Mr. Smith. Yeah, first of all, thank you very much for hosting this event. I know my community members, they are super excited. I know they're already starting and they're already booking profits. So it's a great start. Just a bit about myself. My name is KitKat. Of course, that's not my real name. I started trading US stock in about 5 years ago, and then in early 2020, I started switch to the crypto space just because of the high volatility, the great potential there. I was one of those earlier Dogecoin investors, had some fortune to book some good profit and have been trading crypto ever since. Right now, I am working full-time in a top 10 commodity trading company in the US, headquartered in Houston. It's primarily on energy trading, so that's my primary job, and that's my quant. I am a front desk quant, so quant researcher, quant trader. It's very different between commodity trading and crypto. Like in commodity, a lot of fundamental is playing. It comes into play. Crypto is all driven by hype, so I have to constantly switch between two mindsets on what to trade, how to decide my trading strategy. Back to like what makes me a successful trader. I first don't even think I'm there yet. I'm being humble. In this trading business, we always need to humble ourselves. But I guess most importantly, discipline and following your trading strategy. Doing a lot of back testing to educate yourself about your strategy. That's the key, in my opinion. Yeah, high level summary.
What are some things that you could help people in terms of building their strategy and trying to execute over a long period of time a profitable strategy in crypto? What would you say?
Yeah, that's a very good question. We have all been there, tears and sweats. So I think it's very important to not rush your entire trader's journey. Like we all kind of wanted to make big money in the first few years. We think we can beat the market, but in the end, we know we cannot. So now looking back, I think the best thing to do is really to delve into your own trading strategy. Like there are tons of different trading strategies. You can be trend following. Maybe you want to do reversal, and some people like long, some people like short. So I think first find some trading strategy like that's suitable to your own mindset, your personality, and then identify the suitable market condition that's favorable to your trading style. Like market is ever changing. Like a few months ago, it's all bull market. Right now, it's consolidating. There's no strategy that can constantly book profits. So it's very important to find that suitable market condition. Actually, that's one of the three important components in our trading strategy. First one is identify the trading the market condition. But of course, as new traders, we all start to learn this and that technical setup, like double bottom, head and shoulder, those things. Those are not, I'm not saying these are not important, but they are useful in some period of time. Sometimes they don't work. Like that's the market condition driving the success of these. So first, of course, learn these fundamental skills, but also be mindful about the market condition. That's a more high-level driving force for the entire market dynamics.
What are some differences between, say, the traditional market, so trading indices, and more crypto? What are some differences there that you've noticed?
Oh yeah, the first obvious one is the volatility. Like US stock, you don't see like 20% up or down in those large cap stocks. But in crypto, even Bitcoin can go up and down 5-10% sometimes. So that's definitely good and bad. Like good, as traders, we love volatility, but for risk management, it's challenging. Of course, this market is also, crypto is like a 24 hours open. So it's little, initially when I entered this market, I was very happy. So I don't have to, like wake up early to just beat the New York open time. But I think like, okay, I can trade anytime I want. But then I realized it's not like that. The high volatility tend to occur during certain, period. And the most frustrating part is you can sometimes easily miss a very good opportunity. Like when I wake up, for example, this morning, Bitcoin reaches up to like 65,000. I was planning to sell my call option and I missed that opportunity. Now it's back. So that's very frustrating. I don't see a good way out other than developing a quant algorithm just to automating the strategy. Yeah.
For crypto trading, what are maybe 1 to 2 core principles that you can give people for them to, especially if they're beginner traders? Like I can give you my answer as well afterwards, and maybe we can compare. But 1 to 2 core principles that will really help people in their first 1 year of trading.
Yeah, I think like I'm just going to be very realistic here. Like to me, the top 1 principle is don't chase a big candle. Like, you know, I mean, in US stock market, sometimes that works. Like when Tesla is ripping, it just doesn't stop. So if you buy a call option, maybe it's already highly priced, but it can still triple easily. The continuity, like momentum is good in traditional like US stock market. In crypto, there's too many fake out. So if you cannot hold your FOMO emotion and you wanted to chase those big candles, most of the time you will suffer. So that's an experience I learned most from last few years. And based on that, we actually developed some good trading strategy just based on that. I mean, I guess top 2. So second one is, so first one is what to avoid. Second one is what to, you know, take advantage of. So sometimes when this fake out happens, it always, I won't say it's always, it often indicates some reversal. Let's say if Bitcoin price, especially in a, let's say a daily uptrend, it does a fake out to the downside, that could mean a very good upside potential. Not just the, you know, the space, but also time. It could be like very swift upside motion. So you take advantage of that and maybe build a strategy on top of that. That's helpful. Yeah.
How much do you really think these economic catalysts such as the FOMC, for those of you watching, if you don't know what the FOMC is, that's taking a look at the interest rates in the US economy, and then you've got other high impact economic news such as the non-farm payroll, which looks at the jobs and how well the payroll is performing in the US.
Yeah.
Do you think that these actually have a great impact on crypto? And also, do you trade during these events?
Yeah.
Or what's your strategy?
Yeah, that's a very good question, and my answer might be very debatable. So I will just share my personal opinion. First, it really depends on your, either you are investing or trading. Investing, I mean like hold some coin for like 3-5 years. Trading is like just you know, based on 1 hour chart, hold the position for maybe 1 or 2 days. So if we're talking about investing, not only for crypto, for every asset, we need to pay attention to this global economic, environment. If there's a, interest rate is going down, potentially there's a good benefit for all risky assets. So on that, yeah, definitely. But also keep in mind these events, they have a long-term effect. Don't expect, okay, this news is here, so tomorrow Bitcoin goes up 20%. Not gonna happen. The trend will start to build up gradually. I'm not really a big long-term investor, so to me, these news doesn't matter at all. For stocks, most of the time these news will happen after the trading hour, so it doesn't really matter that much. For crypto, you cannot avoid it. So often you see high volatility when these events happen, especially like FOMC meeting. My experience is that during these meetings, the price goes very randomly. It could go up a lot and then goes back to where it is. So basically, to me, I just avoid these. I don't trade these. I feel like it's so exhausting. I have my own strategy that's more stable, that I have confidence with. I have limited amount of time. I'd rather avoid these events, build up on my own existing strategy.